from the professionals, a shopkeeper's policy, my personal accident, my travel insurance. How many of us are insuring our laptop, our costly mobile phones? Are you covering any liability that my tree in my house falls on the other house and that liability is covered? And a huge expansion, which is why there is no such kind of huge demand. Across the world, insurance product is a push. But then, in developing country, many of these people are saturated markets. The growth rate in US countries for non-life is hovering around 2 to 3% only. While in India, it has been continuously above 15% for the past 10-15 years. The industry has been growing at 10-15 years for 15%. On a GDP which grows about 5 to 8%, whatever it is, still we say your penetration is not there, it's only 0.80%. This is a kind of a complexity which I think there will be deeper analysis into it. There should be customer surveys, there should be basic reasons to see why it is happening. I believe it's not inadequacy of the insurance industry to provide products. There are a huge amount of products. There are about 250 non-life products floating around. Distribution channels, there are huge distribution channels, number of them, there are agents, brokers, in-house marketing, point of sale, insurance marketing firms, common service centers, online chattel, there is a web aggregators, there are policy bazaars and bank bazaars and all that. There is enough amount of availability. Probably it's not enough. Possibly you need to address the customer credibility barrier. Probably you need to come out with a kind of awareness campaign. Look here, it's easy to take an insurance and it is easier to get the claim. I keep on seeing the advertisement from the mutual fund industry saying how simple it is to take an SIP, how simple it is to go into an equity-linked kind of a mutual fund. How do you should go for it? Should you have a fixed income mutual fund, or you should go a flexible income, or it is a risk-based income? And keep on telling you in large, what do they call as advertorials and seminars and sessions. So this is the point in this kind of a seminar in which specialists are there. I think all of us should get together and think. Are we creating some blocks in the mind of the customer that you are not possibly claim-friendly? Policy-friendly, yes, we have agents who will go and sell, but at the time of claim, is there a feeling in the market that we might not deliver to the value they're expecting? I mean, it's a serious thing which we need to express when you're talking about penetration and its forthcoming. Second one is profitability in the industry. Another challenge for the Indian insurance industry from a non-life perspective, I'm saying, is a profitability factor. As on 31/12/2015, when the last quarter results were published, the 31 results are yet coming out, companies are coming with us. Not a single non-life company made profit out of insurance. As on 30, I'm talking about 15th year of opening up of the market. Not a single non-life insurance company made business profits as on 31/12, which the published figures are available. They all made profit out of making investment out of the corpus. The IRDA says you should have a policyholders fund and you should have a tech insurance shareholders funds, and we have these funds, and they say how long this fund should be kept, in what way it should be invested, how should it be, what are the channels in which should be invested. So we invest and make money out of that. And not a single one. Where is the issue here? Obviously, public sector companies have made more losses, but private sector companies also followed through. It's almost interesting to note that standalone health insurance companies, there are 3 or 4 in the country, where the incurred loss ratios are lower, still they are making underwriting profits because the combined ratios indicate all of them are crossed 100%. Possibly as on 31st March, some of them would make some underwriting profits, but not much. So profitability is a major impediment, and if you do not make profit year after year, the capability and attitude of the insurance company to foray into untapped areas is diminishing. Continuous losses. Despite that, when the government of India said, okay, you can increase your FD up to 49, every foreign collaborator agreed that we will scale up our investment to 49% because the amount involved is paltry in terms of US dollars. And they're all sitting on huge funds outside there because there's no growth in the Western. And any amount of investment in a growth economic scenario is good enough for them. It's like Japan investing in India. Japan, there's no interest rate, real interest rate at all. So any investment or any fund holder in Japan is worthwhile to find at least 2 to 3% interest in India. It makes sense to them. So that they are coming in. But then where is the profitability? And is down the line, is there a light at the end of the tunnel? Many of the insurance practitioners do not see the light yet. There could be, there will be market contact, which my previous speaker was talking about. There could be market discipline, and there will be less competition, not aggressive discounting. Today, your property insurance, that is a fire and property insurance included earthquake, is discounted at 99%. I could never understand what could be a discount of 99% in the market. So this is the kind of competition that is happening, and in motor also the competitive discounts are excellent. Despite the competition, despite the non-profitable nature of the operations, the discounts are growing. A very, very complex situations which we are trying to grapple with, we are trying to fight it out, we are trying to increase the profitability, only because of the reinsurance market abroad are awash with capital, and they are not very much keen on increasing the price lines because they themselves have huge amount of capital lying vacant despite all these kind of losses. The past 3 years, there's not been a single major disaster in the world which really attacked the insurance industry's profitability. Despite 3 or 4 major aviation claims, including this last Egyptian one, the aviation premium continued to be soft. There was a Malaysian aircraft, there was a Russian aircraft, they all crashed, claims were paid, but still industry has a huge amount of capital. So we have an issue on distribution, profitability. Challenge number 2. Challenge number 3 is that growth avenues. As Ghosh was saying in the beginning, most of the non-life market is motor and health business. And growth avenues are immense. You just open your market and people keep on coming, insuring has to. But the problem is, industry is not insuring healthy persons as much as we are insuring about to be unhealthy persons. Now you see, most of the people who come and take policies are from 40s, 50s, when they are aware that they might probably need a hospitalization later, and they're still healthy. They're still healthy. But then the awareness gnaws on them that there is a hospitalization cost going up. It's better that I have some kind of protection, my family has some kind of protection, but this is going to be a huge cost for me. But what about those from 18 to 30, 35? The industry has not been able to grab them into the huge one. If you bring them in, and you know the demographic dividend that we are talking about in this country, health insurance would become a huge profitable portfolio. And we would be able to fund more research and more development in the hospitals. Today, entire hospital operations are substantially funded by insurance industry. That's why the hospitals are able to buy complex equipments, complex diagnostic methods, complex treatment lines, because they are partially, or I would personally mean significantly, financed by the insurance industry. But the capability of the insurance industry to continue the support to the medical industry is growing a little bit because all of us are making losses in health insurance. So this is another. So growth opportunity is there. There's a huge amount of population, young population who are not insured. We are not able to tap into that growth segment. So, though the health insurance grows at 20%, we believe the real growth rate that should be there to address the population should be something around 50 to 60%. It's like Indian GDP. Indian GDP, if they have to deliver some amount of prosperity to the entire population, we have no other option other than to grow at 8%. We have to grow at 8%. Only then they trickle down the